This is a video recording that I'm preparing for to be linked here in this post on the Warp Investor blog titled "A Simulation-Based Valuation of the S&P 500, December 2022." And the simulation gives me the following values, the ones that I have here that you can see on the screen. So on the left, we have a more benign scenario. And on the right, we have a more realistic scenario. Um, this benign scenario includes an earnings growth, expected earnings growth of 5.6% for 2022 for the S&P 500 and a 10-year rate of 3.75%. This would give us a fair value for the S&P 500 of 2,889.08. I'm getting these values that I'm using for the simulation and this fair price from the following sources. So the first is this yield curve that shows the yield given paid by the 10-year Treasury minus the 3-month Treasury, and it is uninverting. And right now, the central bank of the United States, the Fed, is maintaining its interest rate increases for the 10-year, which means, I'm sorry, for the short term, which is the Fed funds rate, which is the 3-month, it is reflected in the 3-month Treasury. So this earning version means that the 10-year Treasury rate is actually going up compared to the Fed funds rate. And we can see it in this graph. So that is the part where we can see it's going up. So it was close to 3.44, and now it's more like 3.75. But as you can see, it is going up and it could overshoot the 4% because it did in the recent past. And that's for the 10-year. The earnings growth forecast is, I'm using for the left estimate of the S&P 500, I'm using this 5.6% expected growth from which is pulled from analysts in this report issued by Yardeni Research. But as you can see here, the Yardeni Research estimate is more like 3.1% for the S&P 500. So that would give us the more likely scenario, which is an increase in earnings of 3.1%. That's by Yardeni Research. This is the analysts' consensus. And 10-year rate reaching 4% really soon, which would give us a fair price for the S&P 500 of 2,644.39. Right now, the S&P the S&P 500 is trading at 3,835, as you can see here. So, and this is the end of the year number, which seems fairly optimistic based on these estimates that I've just discussed, including the more conservative one, which is more like 2,889. So it looks like there is more downside going forward, and that's what we are predicting based on the simulation-based valuation of the S&P 500. So we could potentially be seeing soon a drop in the S&P 500 of 45% or so to reach these values, or even lower. It all depends. When you have a bear market, when we are in a bear market like the one we are now, uh, there is a tendency for it to overshoot on the downside to reach a bottom. So this concludes this video, and thanks for watching. And this is an illustration uh, of data analysis techniques applied to prediction of the S&P 500 uh, for a soon a short-term date in the near future. Thanks for watching.